short, the court blocks the merger.
More than 2 years after a merger between Kroger and Albertsons grocery stores was announced, a King County judge has ruled it's a no-go.
The proposed merger violates RCW 19.86.060. That's the Consumer Protection Act.
Union members immediately celebrated the decision outside the courtroom.
We're very happy with this decision. We're also happy with the FTC decision, and we look forward to hopefully a similar decision in Colorado.
If you haven't seen the Kroger-Albertson merger, it's done. It's over, guys. It's over. It's not happening. It is obviously not going to happen. I know some of you guys are cheering for the merger, and a lot of you guys were against it, like I am. Again, I am trying to give you this information, let you know these corporations aren't loyal, and we're gonna go into the nitty-gritty detail of why this merger did not happen and how you can learn from this about how business is run and how these guys will do anything, guys, to get this past you so they can take more money out of your pocket. My name is Orlando. Welcome to the channel. Make sure you hit that like and subscribe button. It really does help out the channel. Also, listen, I got a newsletter. Yes, a newsletter. It will give you tremendous value and it's free. How can you be free? And then also too, if you need any financing for commercial or investment properties, I've been a lender for 20 years. I can assist you with that. That information is in the pinned comment and in the description. Guys, listen, as you saw at the beginning of the video, judges all across the country are saying no to the merger. Why? And you know, it's not a big surprise. It really isn't, because this merger has been messed up from the very beginning.
Brother, what's that?
If you don't know, I've done a video on this already to kind of give you the beginning portions of this merger and why it wasn't going to happen to begin with and why you should be against it. These guys ran on this whole premise of, hey guys, we're going to bring food prices down, but only if you guys agree to the merger first. Huh? So let me get this straight. You can bring prices down regularly, but with a merger, you're going to bring prices down. Okay, that makes sense. And while this is extremely comical, because I listen, these guys telling you that we're going to bring down milk prices after we merge together when we have this $25 billion merger. And guess what? We're a corporation that cares more about money than we care about anything else. We know this. And they're telling you they're going to give up their prized possession of money for you.
That's impossible. That's impossible.
That's what they're telling you. Those turkeys, that chicken, that steak, that ragu sauce, that's $20. We're going to bring that down. But we're only going to bring it down once you guys agree to this merger where we're going to make a lot of money and we're going to take over all the stores that you love and all the prices too. We're just not telling you that.
Excellent.
A Kroger executive admits to price gouging, according to reports by Bloomberg and Newsweek. It happened in a hearing for an antitrust trial. Newsweek says Andy Groff told regulators that Kroger raised the prices of milk and eggs beyond the level of inflation. The report cites an internal email from Groff showing the price of those items were higher than necessary to turn a profit given the rate of inflation. In response, Kroger tells CBS News Detroit, quote, "This cherry-picked email covers a specific period and does not reflect Kroger's decades-long business model to lower prices for customers by reducing its margins." It goes on to say retail prices include the cost to run a grocery store, including labor, transportation, advertising, and other costs.
Did you guys see that? So you're telling me we should believe a CEO of a company that has already price gouged? Here's the thing. The price gouging, it's already bad that you price gouge, but you price gouged in a pandemic.
Got him.
When people were having the hardest time, when people were out of work, you decided to price gouge.
It's an evil world we live in.
So why would people believe that you're going to bring down prices when you merge, but you can't bring down prices in a pandemic? Make it make sense to me, guys. And I know some of you guys are going to get, some of you guys who are sympathizers with these price gougers, are going to come to my channel, come to my comment section and tell me, Orlando, why are you laughing at these CEOs? Why are you laughing at the fact that they didn't get the merger? I mean, would you not laugh? Would you not laugh at an individual that just told you he's gonna price gouge you? Come on, man! He just told you the milk and eggs that you need for your family, he's gonna charge you more on purpose.
Who does that?
And you would not laugh? You would not be happy that the merger did not happen? Come on, man. Make it make sense to me. Again, this is the reason why I say you should take care of you and your family first. If it was you and your family and they were price gouging you, charging you more, not because that's what it costs, not because they need the extra money to pay their employees. It's just because. It's just to put money in their pocket, and they're already millionaires. They're already billionaires, and they're trying to charge you $1 extra for a gallon of milk that you need for your baby girl. Make that make sense. I'm being honest.
These corporations ain't your friends. You should have signed yourself.
Make it make sense why you would not be happy that this merger did not happen. But here, listen, I can't make everybody happy on the internet, right? There's always going to be someone who says, Orlando, I don't care what you say. This is business and I don't care. Well, what can I say to those people? Maybe that's the reason why it didn't go through. You have a CEO who is willingly telling people, oh, I'm going to bring down prices. But then you have the executive that is in a court hearing where he has to tell the truth because he's under oath. And he says, yeah, we do price gouge. Everybody has been knowing this for years, but no proof, right? But now we have the proof. The executive is saying themselves. And then he comes out and says, oh, well, cherry picking. You guys are just choosing this one time.
What?
One time? This is the one time you've been caught. That's my vision of this. This is the first time you've been caught, sir. It has nothing to do with cherry picking an email. We shouldn't have been able to cherry pick an email with price gouging. But maybe that's not enough for you. Maybe that is not enough for you to say, Orlando, listen, I actually wanted the merger to happen. Well, let's go ahead and take a look at some of the reasons. Now, this is 2 years old, guys. This is the first reason why the FTC decided this probably isn't going to work. Well, let's just go ahead and take a look and see what he says.
We're specifically concerned about this deal because with the announced merger was a significant, nearly $4 billion special dividend announcement, which could be valid or could amount to a massive improper giveaway to certain shareholders. We think that we need to review that, and that's exactly what we're doing.
What? Let's break this down for you guys. I know some of you guys may not understand what he just said. So let me just put this in a term where everybody can understand it. What he's basically saying is, it's mighty suspicious that you're giving away a $4 billion dividend. Now, let me just explain really quickly what a dividend is. A dividend is when you own shares of the company. When you own shares of the company and they give you additional money for owning that share, for owning a piece of the company. And out of the blue, Albertsons comes up with $4 billion. Now, here is the problem with that, guys. Here's the problem with it. Albertsons is using the $4 billion as a kickback to big shareholders of the company to allow the sale to go through, which is a no-no. The FTC is saying, listen, it seems like you're doing a kickback to someone, a shareholder, someone at the other company at Kroger's is getting a big chunk of that $4 billion. It's a kickback. It's not really giving a dividend to the small guy or just to the individuals who own your stock. You know that the people who own majority of the stock are either individuals who maybe are partners at Kroger's, or certain shareholders couldn't get over the hump, so you slid them a little bit of money. That's what you did. You slid them a little bit of money. That's what the FTC is saying. And it just looks suspicious that it happens on the day of you announcing the merger. Are you trying to merge together? That's what they're saying. And you know the bad part about this, guys? The bad part about, let's just hear what he says.
You're worried about the dividend because if the transaction gets blocked, you believe that it puts Albertsons in a particularly complicated position. Is that the sort of
You've got it
way to
exactly
think
right,
about it?
Andrew. You've got it exactly right.
So imagine you're trying to sell something, right? You're trying to sell your company, and then you decide to do a $4 billion dividend to pay people off, right? But if you give the $4 billion, your company can't even run. That's right. The company cannot even run if they gave the $4 billion dividend. So it really looks like a payoff.
Gotcha.
Now that we look at it, from hindsight, you're giving $4 billion dividend. You don't have the money to give it because if you give it, then the company cannot even run. And then you will definitely need to be bought out by Kroger's. You see how that worked, guys? Listen, I tried to make that as simple as possible so that people can truly understand. This is a game of shuffling. I can look at the balance sheet and just see it in seconds. I do this all day long. Balance sheet, P&Ls, tax returns. I see it all.
Come on, man. That's too easy.
So maybe that's the reason why it didn't go there. So now you have customers you're going to raise the price on. You've already admitted that you do price gouging. And then you're also doing kickbacks to shareholders of $4 billion that you don't even have.
You're in big trouble, mister.
But it gets better. Guys. It gets better because this happened today.
Want to get to some breaking news right now. Albertsons, the parent company of Safeway, is officially scrapping its merger deal with Kroger, the parent company of King Soopers. It's also suing Kroger for breach of its merger agreement.
Now, all of this is coming a day after a federal judge and a Washington state judge blocked the deal yesterday. Both judges agreeing the merger would harm shoppers and grocery workers as well.
No honor among thieves. It really is the truth, guys. It really is. What do corporations do? If they can't take your money, if they can't pull the wool over your eyes, if they can't win in the eyes of the judges to make more and more money, what do? Well, they sue each other to get money from each other. Hey, listen, man, you had me try to pay this $4 billion dividend and then it didn't even work out to begin with. Oh man, how much money did I spend and how did I put myself in a horrible position now? I can't even compete with you, Kroger. I can't compete with you now because I spent so much money on trying to do the merger.
Don't care, still don't care.
And what's gonna come out in this suit? You're gonna see emails back and forth between Albertsons and Kroger, and they're gonna be saying what? They're gonna be saying, we're gonna make so much more money together. We're gonna raise prices. You're gonna see all the dirt come out, guys. All the dirt is gonna come out. They're gonna say what they've been trying to hide from you from the very beginning. Prices are gonna get raised. Now Albertsons is saying, hey, look guys, listen, I've given away so much money to make this happen and now I can't compete. Oh, those prices at Kroger that, were cheaper, they're going up now because we have to, because the merger didn't work. They're gonna tell you guys now, the reason why they're raising prices, administration costs.
What?
That's right. You're gonna go to Kroger's and you're gonna be like, what the? It went up 50, 60%. We got bills, guys. We tried to do this merger and we did it a little shady, but you got to pay the piper and you're going to pay the piper. You're going to pay all of our costs of this merger that didn't work out. Because we were going to take advantage of you before, but now we really have to take advantage of you because you didn't allow us to do what we want to do.
I beg your pardon?
Well, unfortunately, guys, listen, this is my point. My point is, again, you cannot trust these corporations. These corporations are not loyal. Again, you should put you and yourself first. I don't know how anyone could come here and come to the comment section and really stick up for these guys and say, Orlando, This is not bad. These guys are great. Yeah, they did say they were going to price gouge us. They did say they were going to take advantage of us. Yes, they are charging me $2 to $3 more on a gallon of milk than I would have paid normally. But it's business. How can you support these guys? That's just a question. How can you support them? Anyway, guys, I could talk about this all day, but hopefully you got value out of this content, and I broke it down so that you know the reasons why this didn't happen, why it wasn't a good idea to happen in to begin with. But listen, you won't get all of your value from this one video. I need you to watch this video right here. Yes, this one right here. It will give you information on the housing market, financial news, and get you into your first rental property. I'll see you guys in the next one. Thanks.